Okay, taking a look at McDonald's, we have a December 2026 projection. I put their EPS at $13.25, which is a 16% upside. I dropped their PE 1% down to 27. That would give us a price of $357.75, which is a 15% increase. The analyst one-year projection is $327.52, which is a 5.6% increase. The average S&P PE ratio right now is 29.8, so almost 30. The average S&P year-over-year growth has been 17.5, which means for McDonald's that McDonald's is on track to somewhat match or exceed the performance of the S&P 500. If you take the S&P 500's average annual gain of 10.4%, McDonald's is on track to match or exceed that while also having a lower than average valuation. I think their valuation's at 28 right now, and if the average S&P 500 valuation is 30, that means McDonald's has better growth estimates and a lower PE than the S&P itself, which I think is a great sign. The sales are expected to increase about 2 to 3%, and that kind of supports the EPS as well. The one thing that's very interesting about McDonald's is they have a negative price to book and debt to equity, which normally is a terrible sign. But in this case, a lot of their assets are in real estate, and they don't value those very often. So you lead to scenarios where if they haven't been valued in a while, you have more debt than equity, according to the balance sheet, even though that's not exactly what's going on in the real world. So I put the risk as low, even given the negative price to book and debt to equity, just because of all the factors that go into the stock. Low risk, I put the reward as low. McDonald's for me is a buy right now. And that's all I have for you on MCD stock. If you want to see my projections on popular fintech stocks like SoFi and Upstart, go check out this video right here.